Hi, good afternoon and good evening, everyone. We'll be just waiting for 2-3 minutes, then we'll start. Hi, good afternoon and good evening, everyone. Hopefully, you can hear me. Vikas, am I audible to you?
Yeah, you are audible.
So, this presentation is also visible
On boarding cost.
Yeah, presentation is visible, full screen.
Yeah, it's visible.
Okay. So thank you so much, everyone, for joining today with us. As IFA is always committed to deliver webinars and the CPD to the members as well as to the non-members. Today, as you can see on the screen, the topic is on the borrowing cost. Before moving towards the speaker as well as towards the topic, I have something to basically discuss with the members on the renewal side. Just a second. Okay, so just a small introduction about the IFA. Most of the members who are on board with us know about IFA. For the non-members, we can tell like Institute of Financial Accountants is basically Royal Institute of UK, and we have a group of bodies like Institute of Public Accountants is also part of the group. So we are focused mainly on small and medium enterprise and small and medium partnerships is our focus targets to grow and develop for the sake of our memberships and member benefit. IFA and IPA is a full IFAC member body. And just to inform to the members who has joined the membership via IFA route, for them the announcement is their annual return is due soon in December, as well as the renewal process they have to go through. So this is a reminder to them to take up their annual return and the renewal process on time, so that they will not have any complication later on. So as per the topic, I'm handing over to Vikas. Vikas, thank you so much for joining with us, and you are going to deliver the webinar on borrowing costs. Over to you. Thank you.
Yeah. Okay. Thank you, Sulman. Myself, Prakash Ahmed, I'm PA and fellow member of IP and FF and IFA. I'm currently working with PKF as an audit supervisor, handling most of the insurance and leasing client and financial sector client I'm handling, and having more than 10 years experience, total of 10 years experience in both Pakistan and Saudi Arabia. Now we'll move to our today's topic, that is IAS 23 boarding cost. Okay, Suman, can you move to the next first slide? Hello, Suman.
Yeah, screen is moving. Can you see?
No, screen is static.
Let me share it again. Is it visible now?
Yeah, it is visible. Yeah. Sequence. Yeah, it's visible.
Okay, let me put on the full screen mode.
Okay.
Okay.
Yeah. Yeah. Core principle of IS. First, a sequence of our topic will be first topic will be core principle and scope of IS 23, where we'll understand that what is a boarding cost and whether it is attributable directly or it is attributable or not attributable, and what is a qualifying asset. And then our next stage will be a definition and recognitions of borrowing cost. Then which costs are eligible for capitalization and when we will start the capitalization, and if there is any stage when we can suspend the capitalization and when we will stop the capitalization. And then next step will be the disclosure. So we will first move to the core principles and scope of IS 23. Suman, move to the next slide. Boarding cost, which a core principle is boarding costs, which are directly attributable. First of all, we normally differentiate the boarding cost into two parts. One is directly attributable and other is not directly attributable. So boarding costs that are directly attributable to the acquisition, construction, or productions of a qualifying asset should form part of the cost of that asset. Other costs that are not directly attributable would be straightforwardly recognized as an expense. Now, what is the borrowing cost? Borrowing cost is basically interest and other costs that an entity incurred in connection with the borrowings of the funds. Okay, and next, qualifying assets. Qualifying asset is basically asset that necessarily takes a substantial period of the time to get ready for its intended use or sale. Okay, but if we'll see the assets which don't take a substantial period of time to complete will not be considered as a qualifying assets. Okay, and then attributable costs, which costs are attributable costs. Basically, attributable costs are costs which are directly attributable to the acquisition, constructions, or productions of a qualifying assets. Are those borrowing costs that would have been avoided if the expenditures on the qualifying asset had not been made. For example, if we would not make any expenditures to build a qualifying assets, so that borrowing cost would not have been incurred. So that cost will be considered as a borrowing cost. Okay. If anyone has any question, so they can raise, otherwise you can move to the next step. Can someone move to the next? Next is a scope. Normally IAS 23 deals with the accounting of the borrowing cost, and borrowing costs which are directly attributable will be capitalized in the cost of the asset. Otherwise, it will be totally expensive. And the items which will not be considered as a borrowing cost are a qualifying asset measured at fair value. For example, a biological asset that normally falls under IAS 41, that is agriculture. Then inventories that are manufactured or otherwise produced in large quantity of a repetitive basis. Why inventories that are manufactured or otherwise produced in large quantities on a repetitive basis will not be considered as a qualifying asset, because these normally take a shorter period of time to be completed and are ready for intended use. So those inventories would not be considered as a qualifying assets. And other is uh, imputed or actual cost of the equity would not be considered as a borrowing cost. Can you move to the next?
We have a question here, Vikas, from Daniel.
Yeah.
What is substantial period of time defined?
Yeah, actually it's a totally judgmental. Substantial period is basically, for example, if we see we are constructing a land and building for company's own use, that is property, plant and equipment. Okay, so as those assets are being constructed to be used in the productions or production of the manufacturing of inventories and other use of the assets. So this construction period, substantial period of the time would be the construction period when the asset will be ready to use for the manufacturing purpose. So it totally depends on asset to asset.
Okay.
Okay, and then borrowing costs, which would not be considered, which would be considered, which items would be considered as borrowing costs are interest costs that are being calculated under IFRS 9 and using the effective interest method. Then interest costs in lease liability recognized in accordance with IAS 16. And then exchange differences arising from foreign currency borrowings, to the extent they are regarded as an adjustment to the interest cost. So these costs would not be considered as a borrowing, or these would be considered as a borrowing cost. Okay. Can you move to the next?
We have one more question. Karthik is asking about, could you clarify what are the imputed costs of equity? I think you mentioned on the previous slide.
Yeah. Imputed costs are basically the costs that are not visible, or normally company raise when they are issuing the capital. You can say the preference share when they are issuing. So all costs issuing the preference share would not be considered as the borrowing cost. Normally it's a one example of the imputed cost of the equity.
Okay.
Then how we'll calculate the exchange differences or exchange loss? That would be part of the borrowing cost. Exchange loss. Hello.
Yeah, we can hear.
Yeah. Exchange loss should be the difference of the borrowing cost we normally incur in the functional currency and then the borrowing cost that we paid in the foreign currency. So difference will be the borrowing cost for functional currency in functional currency and that we paid in foreign currency. So whatever will be the difference at the end of the contract, that would be adjusted in interest and should be recognized as should be adjusted against assets. Okay, can we move to the next?
Yeah. Again, one question is, what about the substantial period of trading? I think you have answered for manufacturing, but they are asking for trading.
Yeah, for trading, if we see, I have previously mentioned that inventories normally in the trading companies are, if we'll see, I mentioned that inventories that are dealing in the manufacturing normally has a shorter period of time period. For example, our purpose for those inventories, they are readily available for intended use or sale. So any cost incurred on those borrowing costs will not be considered as the borrowing cost. Any interest cost incurred on those items will not be considered borrowing costs because those are already available for use or sale.
Okay. The next slide.
Next slide is assets which are qualifying assets that IAS 23 mentioned is inventory. That is basically manufacturing inventories and manufacturing plants and power generation facilities. Then intangible assets. Then investment properties. Same I have already mentioned. Can we move to the next? Next is the recognitions of the borrowing cost. These one we have already discussed that assets which are ready for their intended use should not be considered as a qualifying asset. Then financial assets and inventories produced over a shorter period will not be considered as a qualifying asset. So can you move to the next? Next is the recognition. So entity shall capitalize the borrowing costs that are directly attributable to the acquisitions, construction, and production of a qualifying asset as part of that assets. An entry shall further recognize other borrowing costs as an expense in the period it will incur them. Further borrowing costs that directly attributable to the qualifying assets are included in the cost of assets and are capitalized. So that are capitalized as part of the cost of the assets when it is probable that the entity they will result in the future economic benefits to the entity and the cost can be measured reliably. Okay. Other than directly attributable costs will be considered as directly expensive. If it is not probable that the cost will result in a future economic benefit, so it should be expensive. Okay. One example that standard had mentioned is when entity is applying IAS 29, that is a hyperinflationary economics. So all cost of the interest, all borrowing costs should be recognized as an expense that compensate for inflation during the same period. During the same period when the actual interest cost was incurred. Okay, can you move to the next?
We have questions.
Yeah.
Okay, I think those are just general comments.
Okay, next is borrowing cost eligible for capitalization. Basically borrowing costs which are directly attributable should be considered for capitalizations, but there are two types of capitalization. One is other funds are borrowed for specifically purpose of acquiring or obtaining a qualifying assets, or funds are obtained either generally for the purpose of acquiring or obtaining the qualifying assets. Okay, if assets are specific, qualifying assets, that is, if funds are obtained directly for the obtaining the qualifying assets specifically, then all the borrowing costs incurred should be capitalized during the period of during the period of the interest, during a period for which we are incurring the interest cost. If normally what happens when we take the funds, so when financing activity entity is coordinated centrally, when we normally arrange the financing arrangement, and then qualifying asset may result in entity obtaining borrowing fund and incurring associated borrowing costs before the sum or all of the funds are used for expenditure on the qualifying asset. So in such cases, funds are normally often invested temporarily for somewhere just to mitigate the expenditures of the qualifying assets. In that case, all the income on those temporary investments would be adjusted against the borrowing cost. So in case of specific fund, borrowing costs would be the actual borrowing cost incurred minus any income on the temporary investments. Okay, if funds are acquired on general basis for the purpose of obtaining of qualifying assets, so all the borrowing costs should be determined on the capitalization rate to the expenditure, and the capitalization rate will be the weighted average of the borrowing cost applicable to all borrowings of the entity that are outstanding during the period. Okay, however, an entity may exclude from this calculation borrowing cost applicable to the borrowings made specifically for the purpose of obtaining qualifying assets until substantially all the activities are necessary to prepare that assets for the intended use or sale are completed. Okay, and the amount of borrowing cost that the entity capitalized during the period should not exceed the actual amount of borrowing costs incurred during the period. Okay, if anyone has any question, he can ask.
Yes, we have two questions. So I'm going to allow them to talk. Yes, Muhammad Faik, you have raised your hand. So I have opened your mic. You can speak. Faik?
Yeah.
You have to turn on your mic and you can speak. Okay, I think meanwhile, I think his mic is not open. So another one is Mr. Kamzul Najmuddin. So I have opened your mic. You can also speak. You have to turn on your mic and you can speak. Or otherwise, you can type your question if you are not able to. Okay, so I think maybe they will type their questions.
Okay.
We have another one. Yes. Okay. Anyway, you can proceed, Vikas.
Next slide. Okay. Then next is basically impairment. Normally, impairment section is will be covered in IAS 36. I think IFA has already covered that topic, but I will just mention a little bit about the impairment of the qualifying assets. When the carrying amount or the expected ultimate cost of the qualifying assets exceed its recoverable amount, or NRV, that is net realizable value, the carrying amount is written off in accordance with the requirement of IAS 36. Okay, and whatever is the difference between the carrying amount with whatever is the amount that from which the carrying amount is exceeding from the recoverable amount or higher of the NRV, it would be considered as an impairment. So we can move to the next. That is a commencement, suspension, and cessations. Commencement is basically when we will start to capitalize the borrowing cost and when we can stop the borrowing cost. Suspension is when we can suspend the borrowing cost to recognize, and after a certain span of time, a period of time, we can again start to capitalize it. And then third one is when we will actually stop the capitalization of the borrowing cost. Okay, for capitalization, commencement of capitalization, standard mentioned 3 criteria. Okay, commencement date for capitalizations is the date when the entity first meet all of the 3 conditions that are mentioned here. First is the incurred expenditures for the assets, and second one is it incurs borrowing cost. Third one is it undertakes activities that are necessary to prepare the assets for its intended use or sale. Okay. And other thing, expenditures on a qualifying assets includes only those expenditures that have resulted in payments of cash or transfer of other assets or assumptions of interest-bearing liabilities. Expenditures are reduced by any progress payment received at grants in connections with the assets. Okay, that we have already mentioned that if there is any temporary income on investment, that would be adjusted against a borrowing cost. Okay, then next is the average carrying amount of the asset during the period, including borrowing cost previously capitalized, is normally a reasonable approximation of the expenditures to which the capitalization rate is applied in that period. Okay, and the other thing is necessary activities to prepare the assets for its intended use or sale normally encompasses more than physical conditions of the assets. It means they include technical and administrative work prior to the commencement of the physical constructions, and such as you can say activities associated with the obtaining permits prior to the commencement of the physical constructions. However, such constructions, such activities might exclude the holding of an asset when no productions or development that changes the asset's conditions is taking place. For example is when the borrowing costs incurred while the land is under development as capitalized during the period in which activities are related to the development are being undertaken. However, borrowing costs incurred while land acquired for building purposes is held without any associated development activity do not for capitalizations. Okay, so this was a total for the commencement of borrowing costs. If anyone has any question, he can ask.
Yes, we have Dr. Saifuddin. So I have turned on the mic. You can speak.
Yeah.
He has to turn on his mic from his side and then he can speak.
Yeah.
Hello?
Yes, doctor.
Yeah, you hear me? It's okay. Thank you and thank you for the chance. Actually, just I have a practical question actually related to the borrowing cost. So this is a case. It is actually you should have to just to listen very well. So I have a case really. One of the company really is not here. They are getting some borrowing cost around $6 million in Sudan. This is case practically.
Okay.
And the Sudan already it is listed under inflation countries, hyperinflation. It is 29.
Okay.
And and this is in the same time the currency, there is a problem there in Sudan. It's moving, the economic is going down, everything is bad. So we want to know the relation because they are going to impact the equity of the company if you are using the differences of foreign currency of the borrowing rate, and they are going to back income statement, then they go for the retained earning, then the equity of the company is getting negative. So just we want to know the relation between 29, 21, and 23 as a borrowing cost. Thank you for you. Just
IAS 23 normally mentioned that if when entry applies IAS 29 financial reporting in hyperinflationary economics, so it will recognize any cost as an expense that a part of the borrowing cost that compensate for inflation during the period of inflations. For example, if company goes for the hyperinflationary financial statement in 2022, so first we have to break out the part of the borrowing cost. What would be the actual cost of borrowing? What would be the actual borrowing cost, and what is the impact of the inflations? So all the impact of the inflation would be considered as expense out, and the remaining would be considered as a capitalization, subject to the conditions mentioned here that we are mentioning in the commencement version.
It's okay. Okay, thank you.
Okay. Then next is the suspensions of capitalizations.
Okay. Yep. So we have 2-3 more questions, but someone asked to elaborate on suspension side. Yep.
We are just started the suspensions. Suspensions entity shall suspend the capitalization of borrowing costs during the extended period in which it suspends active development of the qualifying assets. Okay. Entity may incur borrowing costs during an extended period in which it suspends activities necessary to prepare the assets for its intended use assets. Such costs are basically cost of holding partially completed assets and do not qualify for capitalization. Okay. However, and does not normally suspend capitalization borrowing costs during a period when it carries out substantial technical and administrative work And entry also does not suspend a borrowing cost. A capitalization of borrowing cost when a temporary delay is a necessary part of the process of getting an assets for its intended use or sale. For example is capitalizations continue during the extended period that high water level delay construction of a bridge. If such high water level are common during the construction period in the geographical regions rain involved. So normally when assets when a temporary delay is a necessary part of the process of getting the assets for its intended use, those should not be considered as suspensions of the borrowing cost. Okay. Okay. This was the total for the suspensions of the borrowing cost from my side. If anyone has any question, you can ask.
Yep. Daniel again asked the question: if the construction is suspended for a shorter period of time, for example, 1 month, and that is part of routine construction.
Yeah, if it's a part of routine construction, then it would not be considered as suspension. So you can't consider it like a suspension.
Okay, we have, I think, one more hand raised. Fahad, you can talk. You have to turn on your mic and you can talk. Fahad. Hello, Fahad.
Yeah, Fahad has raised a question: construction stop for 6 months. First, we have to understand what is the reason for the stop of the constructions. Okay, either it's a normal routine practice to stop the construction, just like I mentioned that in standard I mentioned one example like higher water level is the delay of construction of a bridge. So that is a normal part of the constructions. So it would not be considered as suspensions. Either it is for 1 month, 2 months, 3 months.
Okay. So next slide. I think okay, no. Okay, the next one is this. Yeah.
Next one, third one was the CESSATION of the capitalizations.
Sorry, should I stay on this slide?
Yeah, you should say. Third one is CESSATION of the borrowing cost. When CESSATION of the borrowing cost is basically cut off when we will stop to capitalize the borrowing cost. Okay, entity shall cease capitalization of borrowing cost when substantially all the activities necessary to prepare the qualifying assets for its intended use are completed. Okay, an asset is normally ready for its intended use or sale when the physical constructions of the asset is complete, even though routine administrative work might still continue. Okay, if there is a minor modification such as decorations of the property of the purchasers or user specifications or all that are outstanding, these would indicate that substantially all the activities are completed, because those activities are just an value, or you can say the normal routine or administrative work. Okay, and when an entity completes the construction of a qualifying assets in parts and each part is capable of being used while constructions continue on another part, entity shall cease capitalization of borrowing cost when it completes substantially all the activities necessary to prepare that part for its intended use or sale. Actually, standard has mentioned one example regarding this thing that I mentioned, that if the qualifying asset is being constructed in parts and the asset is being capable of being used in parts, each part of the asset is being capable of use. It's an example. Entity acquires and develop a land, okay, and then thereafter construct a building on that land, and normally land represent the area on which the building will be constructed, and that land and building basically both meet the definitions of the qualifying assets, because they have incurred expenditures, borrowing costs they have incurred, and necessary activities to prepare the assets for intended use are already been started. Okay, as the land, a company have to use those land and building in its normal productions. So we can say company can't take future economic benefit a loan from the land. When we will construct the building, constructions will be completed. So company will be in a position to use the assets, or you can say company can avail the future economic benefit from the intended assets. So borrowing costs will be stopped when the buildings will be constructed. Okay. Next slide, please.
We have question, Waqaf.
Yeah. Yeah.
Abnormal bankruptcy of the constructor, will it impact the borrowing cost?
The normal bankruptcy of constructor or contractor?
Contractor, basically, they should mention anyway.
Actually, if Fahad can elaborate its more question, or his question more, it will be better.
Actually, what I understood is he would like to say that if because of bankruptcy of the contractor, the work is stopped. So, in my opinion, it cannot be capitalized.
Actually, standard is very clear. Any costs that are directly attributable to the qualifying asset. Okay. And directly attributable cost standard has already mentioned that would have been avoided if the expenditures on the qualifying asset had not been made. So bankruptcy is a different thing. So it would not be considered as a borrowing cost. Would not fall in the definitions of the qualifying asset.
And basically, if there is any cessation or suspension because of contractor bankruptcy, it cannot be still the borrowing cost cannot be capitalized under that period.
Yeah. The borrowing cost would be capitalized, would not be stopped from the capitalization. Yeah.
Okay,
Can we move to the next? Next slide is the commencement of capitalization. This slide I think we have already covered in our previous slides. Commencement of the capitalization, basically. Salman, I think these slides we have already covered.
Okay.
Next slide is this one we have already covered. This is basically more detail of the commencements and suspensions and cessations. So we have already covered these 3 slides. Okay, this one completion in part, we have already covered that. The last one is the disclosures. And regarding disclosure standards, I have defined the minimum of 2 requirements. One is the amount of the borrowing cost capitalized during the period, and the second one is the rate. So capitalization rate used to determine the amount of borrowing cost eligible for capitalization. So for specific funds, it will be a rate applied on a specific, and for general funds, it will be a weighted average of the borrowings available at the period end. Okay. First, IAS 23. Sorry, if anyone has any question, he can raise hand or he can ask questions.
Okay, so I think Fahad had similar question, but you have answered.
Yeah.
Okay, so we have a question from Amir. Do we have any Excel template or related calculations or checklist?
Yeah, I have to check and I can share. No, later on we circulate it.
So so far we are ended up with the theoretical basically presentation, which has been presented by Vikas. So I think the house is open for question answer and the practical questions which you have in your mind. So we can open the mic as well if someone has any issue or the question to be asked. So please raise your hand, and so that we can allow you to talk. Or you can type your questions. Okay. Yes, Fahad, you can.
Assalamu alaikum, gentlemen.
Walaikum salam.
All of us, thank you very much for giving us this important lesson.
Yeah.
And my question is regarding the borrowing cost that we are taking the interest on one construction property a
Yeah.
regular basis. And
Yeah.
due to the contractor was bankrupt, so he stopped the work and
Yeah.
even he has taken the advance almost 80 to 90%. And then due to his bankruptcy, all business has been stopped. And we are taking borrowing cost every month as an interest of that capital investment. And now we are stopped since 6 months. Now we are giving the contract to another contractor, and he is doing the remaining work. So during this 6 period, should I take the borrowing cost same as it is or not?
No, no. Actually, those will be considered as a suspensions basically,
Okay.
because normally standard define the suspension of capitalization in the borrowing cost during the extended period because the productions was stopped, construction was stopped, active suspensions of the development of the qualifying asset was stopped. So I think it would be considered as a suspensions of the capitalizations during that
Okay.
6 period.
So I did not take it, but as the year end is coming close, so I just asked this question to just make us our account auditable as per
Yeah.
the IAS 23.
Yeah. Actually,
Basically, you cannot capitalize.
yeah, we can't.
It will not capitalize, but as a CWIP, we will give him the construction cost plus the borrowing cost, which we are
No,
realizing
no, no.
during this.
If we are recording, if you are uh, if you are putting under the CWIP amount, it means you are capitalizing it. No, you are making a part of the inventory cost.
Okay.
Yeah.
So
The
I should not.
CWIP would not. Yeah, it should not be considered
Okay.
as a part of that. Sir.
Okay.
Basically, you have to
Understand.
directly charge to PNL.
Okay. Thank you very much. Thank you.
I think no one others has any questions. So
Yeah, yes, the Daniel is saying what disclosures under the notes to the financial statements are required for borrowing costs.
yeah, minimum we have to apply two disclosures. One is the total amount of borrowing costs capitalized during the period. Okay, that we normally represented under the assets of under the note, the qualifying assets where the asset normally is grouped. For example, if the borrowing cost was required to construct the PP, property plant equipment, then we will mention under the property plant equipment note, okay, total cost capitalized is this one, and the rate at which the cost was capitalized.
Okay, we had another question, but that is on about sharing the slide. Yes, whosoever has joined this webinar, he will receive the CPD hour certificate or CPD hour email along with the presentation, but maybe in a week time. Okay, so one more question. Please advise if IS 23 applies to services or is just for the manufacturing or production?
Yeah, it is. Yeah, it is only for acquisition, construction, or production. Basically, services these are already for intended use, so we will not apply the IAS 23 on services. And services is not. Yeah.
So one more question is like, let's say if asset is already being constructed and due to its I can say turnaround or maybe because of what I can say reconstruction or its extension basically. So can we still capitalize the borrowing cost, or how we can determine the qualifying asset?
Yeah. Uh, first, if we normally it is the case when borrowing cost is being incurred on the from the funds that are borrowed generally. Okay, so first we'll see if the three conditions that standard have mentioned is okay. Expenditure we have already incurred on the assets because the asset is already under construction, and borrowing cost that we have already incurred. So we will capitalize the borrowing cost on the base of the weighted average of the rate calculated on the closing uh, closing borrowings that we have at our period end, outstanding borrowings that we have during the period.
Okay, so the next question is whether interest of finance lease taken on asset which is used for construction of qualifying asset should be capitalized.
Yeah,
interest
it
of
should
finance
be
lease.
interest in respect of lease liability. Normally, yeah, it will be on finance lease. No, it will not be.
Sorry, again, I think your voice was dropped.
Yeah, you are saying that interest on the lease assets.
Yeah.
Either should be normally finance cost on the lease asset will not be capital. Normally when if we'll see when we will calculate the fair value of the assets or right of use assets, so it is already included in the cost of that assets basically. So indirectly we are just expensing it out on the payment to payment basis.
Okay. So let's say if any asset which is on lease, and let's say land is on lease, and we are constructing a plant on that land.
Yeah.
So, but can we capitalize the lease basically leasing cost that is subject to basically other standards like IAS 20,
yeah,
16.
IFRS 16 basically.
I-16 or IFRS 16. Yeah.
Yeah, IFRS 16.
Okay, so let me see. Anyone has any questions? Okay, we have Ahmed. Ahmed, I think Ahmed would like to talk. Yes, Ahmed, you can unmute and you can talk.
Hello, can you hear me?
Yeah.
Hello, Assalamu alaikum. First of all, thank you very much for sharing us this information. It's very useful to to gain this knowledge. Just before, I was also confused with the the IFRS 16, the lease. The way the lease cost is it's determined. I can understand with the IAS 23, you got the same capitalization occurring on this as well. So just need a little bit more understanding on that side. What is the if IFRS 16, the lease, and IAS 23, if they're clashing with each other or not?
No, it's not clashing. It's not clashing basically.
So how the way it's treated and the treatment of the capitalization, because I'm pretty sure the cost is going into the P&L, isn't it, on the both side, even for the IAS 16 and the IAS 23?
Yeah, basically IAS 23 that mentions that the borrowing cost in respect of a lease liability would be recognized in accordance with IAS 16 is basically after the commencement date. A lessee shall, it is the case of lessee basically. Okay, after the commencement date, that is basically subsequent measurement of the lease liability. After the commencement date, a lessee shall recognize the lease liability by increasing the carrying amount to reflect the interest on the lease liability. So it should be capitalized subsequent to the measurement of lease liability. If there is any interest cost on those lease liability would be the part of the lease liability.
Right, I see. So it's the way the reporting is generated. So we have to mention.
Yeah.
Yes, I understand actually.
Yeah.
Right.
Yeah.
Thank you. Thank you for sharing this information. Very much appreciated.
Thank you.
Thank you. Karthik, you can also speak.
Am I audible?
Yeah.
Thank you. Good evening, and thank you for the session. I kind of lost the clarification, which there's a poor connectivity issue regarding the applicability of the standard to whether it's applicable only to the construction industry or for all industries. Kind of lost you there. Would repeat that.
Yeah. Actually, standard apply to the any, you can say the other than services, or you can say tangible assets, basically.
Right,
Either it's a manufacturing, construction, or other productions.
Sure. But what if I'm a service company and I'm investing into, I'm having a capital expenditure on probably something. So would that be considered for borrowing costs?
Sorry, Karthik, your voice is not
Can you hear me now?
Yeah, it is audible.
Yeah. So what I'm saying is, what if a service company has spent on some capital expansion, and in that case, would we consider that borrowing cost? Would the service company be applicable for the borrowing cost there?
Yeah.
Sorry.
Yeah, Salman, are you saying anything?
Yeah.
No,
can you hear me?
You can answer.
Yeah, sure. Do you want me to repeat the question?
No, it's fine. Actually, Vikas, Karthik is saying for services industries, can they capitalize the borrowing costs? And you already answered to one of the participants. For services industry, we cannot capitalize the borrowing cost, right?
Yeah.
Right. Even if they're having a capital expenditure, is it?
Yeah.
Thank you.
Now, two more questions. If there is any borrowing cost of loan for a project in SME seems to be small and medium enterprise, it will be included in the cost of project, or will it be charged directly to P&L? Basically, they are asking for, Tokir is asking that for SME standard, so still borrowing cost can be applied or not?
Yeah, borrowing cost is applicable to the even SMEs.
Yeah. So basically, it is applicable. This standard is applicable on both for full IFRS as well as the IFRS for SMEs.
Yeah. Same principle will be applied in SME cases.
Okay. Let me see. Anyone else has raised a hand? No. Okay. So we can wait 1 or 2 more minutes if someone has any further question on these.
Yeah, sure.
Meanwhile, I'll basically talk about our next CPD event. Basically, we'll be having a next CPD event on 26th of November. Same 6 p.m. at KSA time, which is again Saturday. So the topic which we will cover will be financial instruments. It's a very big topic, but we will see in 1.5 hours how much we can cover. Maybe we'll skip some areas and we'll try to focus on some particular areas regarding that. Speaker is already being chosen for that, and here you can see on the screen the speaker's detail for the day, Mr. Vikas, and you can contact him if you need any further clarification on the topic of today's concern. Again, I am going to highlight that for the IFA members who has joined through IFA route, they have to consider their renewal process for next, I can say, 1.5 months. They have to renew their membership, as well as the important thing is they have to renew or they have to file basically their annual return, which is very much important. Otherwise, we will like IFA is sometimes issuing a disciplinary notes and the members have to pay heavy penalties on that as well. So we'll encourage that all the members who have joined through IFA route, they should have submit their annual return on time along with their annual fee renewal process as well. So we already have on our IFA YouTube channel a detailed guide. We have 2-3 videos how to file your return and how to renew your membership. Meanwhile, I think we have no, we don't have any further question. Okay, I think we should conclude now. Thank you so much, everyone, for joining, and thank you so much, Vikas, for your precious time to deliver this topic on the borrowing cost. And we are always committed to deliver these different webinars. As you can see, on 26, we are going to have on IFRS 9. So it was a very helpful session and a very useful session for all of us. Thank you so much, and have a good evening for Saudi, and maybe for other regions, maybe good afternoon. So thank you so much, everyone. Thank you.
Thank you. Thank you, guys.
Thank you. Bye-bye.